Hey creators! Ever wake up to sales from countries you've never even visited? Amazing feeling, right? Until you realize that there are taxes to be paid. I still remember the moment I got my first sale from Japan, then Germany, then Brazil, all in one day. The excitement was through the roof, but then came the questions. Do I need to register for VAT? What about GST? And why are some countries requiring me to collect taxes while others don't? If you are selling digital products internationally and these questions keep you up at night, you are not alone. I've been there, done that, and made all the mistakes so you don't have to. In the following guide, I'm going to break down exactly how to handle international taxes as a digital creator. No complex jargon, no account speak, just practical steps that you can implement today to sell globally with confidence. We will cover major tax systems you need to know about, the tools that make compliance a breeze, and yes, I'll even show you how to automate most of it. By the end of this tutorial, you'll know exactly how to handle VAT in EU, navigate digital taxes in emerging markets, set up your sales systems to scale globally, and how it applies to Easytools ecosystem. Ready to become a global tax pro? Let's dive in. Okay, before we begin, I will just quickly introduce myself. So, my name is Greg and I'm a co founder of Easytools. Well, basically, I've been for the past 20 years, since I was a kid, I was selling digital products online. Mostly, I was selling courses, ebooks, SaaS, software, and I've been doing all that with different software. And finally, I've just created the software for myself because I couldn't find any better software that would solve all of the problems, including international sales. So today I'm going to show you something that's based on my experience and something that I came up with, and you can basically use my knowledge to introduce it to your sales process. You don't necessarily need to use Easytools for that. Also, bear in mind that I'm not a tax advisor, nor this is a legal advice. So please consult someone smarter, especially if you are earning a lot as a creator. Okay, let's jump right in. Why it's worth to listen to me now? Well, you can save a lot on taxes, especially if you're using solutions such as Paddle, Gumroad, Lemon Squeezy. So those are merchant of record solutions that are very expensive, and also you pay all the available taxes, not just the ones that you have to. So especially if you're using those or considering using those solutions, please stay with me up until the end because I think that you can save a lot here. Also, you will gain confidence. It's really important that you are responsible for your business affairs and understand taxes ecosystem. Well, this is true for most of the businesses that you build them so that they are worth something, that they are sellable, that you want to have the total control. Unfortunately, there is no way to outsource it to a third party company without losing this control. And also, at the very end, it's you who are liable for all those actions and for the taxes. So basically, it's just better to get to know it. And I've seen so many founders and creators paralyzed about this whole ecosystem. It's difficult, but believe me, if you stay with me for the next hour, you will understand and everything, and this will be the only resource that you need to understand it and to implement it so that you are confident that this is right, or at least as good as possible. You will know how to apply it because I'll show you the exact features to enable on Stripe or within Easytools, or to request within your system, whatever you are using. And you will also have an actionable checklist that you can implement and look at every time when you want to deal with it. So, what is a digital product? This is our first question, because if you are not selling digital products, this session is not for you. Well, basically, you need to kind of like get advice somewhere else, because I will be talking about digital products only. And those apply if two conditions are met. First one is deliver method. So content or service is delivered via internet. So through email, through your website, or access is granted after logging into your platform. This is pretty obvious, right? And also in a digital form. So a product that exists in a digital form is created by its creator operating in a digital environment. So this is kind of like, this is obvious that when you sell templates, SaaS,
ebooks, content like info products, courses. This is all digital product. So we'll focus on that. And the other products are the ones that are delivered to your customers. They are goods that you store in warehouses or stuff like that. So this is something that we won't be talking about. Okay, so you know that you are selling digital products, but what kind of products? It's also important that you set the right product category, and you can either do it on Stripe or on Easytools. I'm going to show you how to do it, or within your software of choice. However, this is pretty important because based of the category of the digital product that you are selling, there will be a different tax rate applied to the checkout. Different countries treat those products differently, and for example, in one country, ebook can be treated with a reduced tax rate, and in the other one, it will be just standard rate. So basically, this will help you get your products taxed appropriately, but in most cases, it will let you save money because when you don't have those categories set, then you will be probably paying the most of the taxes because just for being secure, those services will apply the default rate, which is the standard rate, the highest rate on the checkout. So it's really worth to do it. And on Stripe, well, basically your first step is to enable Stripe tax. And this is a service. If you just type in Stripe tax in the search bar, you can go to tax and you will be able to enable Stripe tax services. Well, this is an alternative to what we offer on Easytools. And unfortunately, Stripe services are pretty expensive. So for that particular reason, we also have a much cheaper service that does exactly the same on Easytools. But if for some reason you have to use Stripe, you can use it on your own. So with your own checkout flows, if you integrate with Stripe, and you can also use Stripe tax within Easytools. So we integrate with it. However, it's a lot more expensive usually because it's 0.7% of your sales. And apart from this, the tax services from Stripe, they work really good. So basically you enable the tax first. And in the tax settings, you will be asked to present the product tax code. So this is the default category of products that you are selling. And then on the product level, you can also change this category. So if you are selling ebooks or courses, on the product level, you can adjust it in Stripe as well. But this is important that you set it here and also that you set it for individual products. If you are using Easytools, you will go to Store and then to Store Settings. From here, you will go to Invoicing and Taxes tab. And as you can see, you can use our recommended solution for billing, tax calculation and invoicing, but you can also use Stripe Tax. I will discuss it in detail a bit later. And now I will stick to Easy Billing, which is our preferred option with most convenient settings that you can get. So basically, the product setting, the tax category, is also set here. What I have as a general tax category is instructor-led online courses, and I can select from different categories. So this is the product category, the most important thing that you should remember about. And as I said, this can be set on a general level. So this general level in the store settings will help you set this tax category to all of the future products that you create within the Easytools platform. However, you can customize it and you can change it in every product that you add. So here, for example, I have a specific product, and for this specific product in product basic tab, I can go down and I can select different tax categories. So I can, for example, select digital books. As I said, this is quite important because it affects lower rate of tax that can be applied depending on the country. I will get to that a bit later, but for now, it's important to understand that. Okay, so let's proceed. This will be the checklist that I will be giving you throughout the whole tutorial, and you'll be just getting the step-by-step instructions on what to follow and what to do for your product. So first, you have to know that you are selling a digital product, as we discussed, and you know what category of product you are selling. You've set the category of this product in Stripe or in Easytools. Now, the second important thing. So what is a sales tax? There are different types of taxes around the world, and there is government taxes for properties, for your regular income, for let's say investments on stock exchanges and stuff like this. So we won't be talking about all of those taxes. We will just focus on one specific tax. And two main taxes that you pay are basically income tax, and this is different types of taxes around the world. And of course, those income taxes are personal taxes that are handled by your accountant. And this is usually a tax that you are obliged to pay from the net amount of your sales. So what you basically earn for yourself as a person, your government will charge you income tax on top of that and will say, okay, you have to pay, let's say 20 or 30 or 40% extra. And this is something we cannot do anything with. And it's based on your local tax authorities, and your accountant is handling this for you. So this is the income tax. We won't be talking about the income tax here. We will only be talking about something that I put in a category that I call sales tax. However, this sales tax is treated differently and has many different names around the world. So for example, in European Union, this is VAT. You have Australia with GST and US with sales tax. And basically, this is the same, you might say, category of taxes, which are consumption taxes. Those consumption taxes are being added to everything that you sell online. So to every sale of your digital product, you have to add this consumption tax. And this consumption tax depends on the country where your customer is located. So this gets really complicated, right? Because you have to know where the customer comes from, and then you have to know the law of this country and also the category of the product that you are selling, how much is the tax rate in this specific country, and then you have to apply it in the checkout. Luckily, we handle all that, and Stripe also helps you handle that. So this is great news. However, I need you to understand how this tax works. And it's also not likely that your accountant is handling this globally, because there is so many rules all around the world. There's so many different taxes, and probably your accountant is not doing that, or maybe to some extent, but not fully complying to these international laws. To give you a real example, I wanted to show you this website. Although it's not loading properly now, you can see that there is over 304 countries, and that's not only countries, because those are also regions or maybe states. In US, for example, they have different tax jurisdictions, and they apply different taxes for different product types. So, for example, in Albania, you have different tax rates like 26%, 0%, and this is all tied to different product types. So, if you are selling ebook to Poland, you will pay 5%, but the standard rate in Poland is 23%. So this is very complicated, because it gets like thousands of records that you have to know and have to calculate in order to apply correct tax. And yes, you have to apply it for customers from Albania, even if your business is not registered in Albania. This is the consumption tax. So basically, governments say that, yes, it matters that customer comes from our country, and our country needs a piece of your income in this case. So you have to care, even if you are based in Switzerland and someone buys from Albania, you have to care about adding this appropriate rate, and also to paying this tax to Albanian government. I will tell you how to mitigate and how to avoid this in a few minutes. So bear with me and stay with me, because it will get a lot more easier. But you need to understand this first. And those calculations are very complicated. Also, this changes constantly. So basically, here are some changes for a global tax. And you have like the 1st January of 25, there's like so many different changes. There are changes in tax rates. They are reduced rates implemented and introduced in some countries and stuff like that. So basically, it's impossible to track it, and it's impossible, completely impossible, as a creator to just have it all in place. But Easytools gives you an edge here, and I will talk about it later. Okay, so now you know that we talked today about this sales tax only, this consumption tax. And this consumption tax really matters to you, because there is different tax rate on different products of different product types that you have to apply them in the checkout. You have to collect this tax, you have to report this tax, and then you have to pay this tax. As a seller, unfortunately, this is how it works. It shouldn't work like this. It's stupid, but this is how it works. Countries or even states or counties have their own definition of what you sell. So, for instance, software is taxable in 25 US states and 7 states only if the customer needs to download it. So, Some states consider software a service, other consider it as a product. In Hawaii, it's also taxed as a service since services are taxable there. And in Florida, where services aren't taxed, it's also treated as a service, so no tax is added. So this is really, really complicated, and you need someone to take care of this. And this has to be handled automatically because on the checkout, we need to automatically decide where the customer is coming from and then apply a proper tax rate. So there is our checklist. It goes to the next point. I have to pay sales tax that depends on my customer location. This is the second thing that you have to do. And obviously, I will tell you how to mitigate that and how to make this easier, but this is what you have to do. Okay, now let's talk about selling locally versus globally. So I really think that you are selling globally and you are selling to all of the different countries over the world. However, there is some distinctions where you just want to sell locally. It's so much easier, and I just want to talk about it briefly. So if you want to sell locally, and sometimes it's also called domestic. So domestic sales are those sales that are to your country of registration. So probably your company is registered in Switzerland, let's say, and then you say only to Switzerland. This is local selling, this is domestic selling. So there is usually no big deal with all of this hassle once you sell only to your country, because you just set your local tax rate on global or product level, and that's basically it. So you decide what tax rate we or Stripe or any other service provider should apply to your products when you sell them. And you know these tax rates because it's your legal jurisdiction and your accountant knows it, and the price of your products has always tax included. But on Easytools, you can also decide if you want to display the net price as a main price. So I want to show you that because it specifically boosts your conversion rates. Okay, let's first see it in the settings. So in the store settings and on a general level. So as I said, if you have international sales turned on, so if you turn it on, we will then calculate the tax category also for your local, so domestic sales, from this category here. So we know how much tax we should apply for instructor-led courses for your country and different countries that you sell to, and we will try to calculate it automatically. However, if you have this disabled, we will always rely on the local sales tax rate that you set here. You can set it globally for all of the future checkouts that you create, for all of the products that you create in future. So you can say that this is 8% or 5% usually. So we ask what is the rate that you use the most, because of course you can sell different products and those products can have different rates. So this is just like general settings. But then when you create different checkouts and products, you can obviously say for each of those products, you can decide what is this specific tax rate. And once you define a product in price variants, when you go to a specific price variant, you will be able to set this here. I have this international sales enabled, so it's not available. But if you are selling only locally to your country, then you will have this feature enabled. But also, while we are in the checkout, I wanted to show you this net price priority and what does it mean. So if you have different prices and you are mainly selling B2B, you might want to have this set as a net price, to show net price. The price here will be lower than the expected price that you want to get, because we will deduct the tax that has to be paid from this price and display lower net price. And here, when someone completes the purchase, he will have the full price, because obviously he has to pay the full price of $39, but in fact, the price without the tax is $31.71. And this is okay for B2B because businesses can deduct this tax from their income. So basically, this tax is transparent to them, you might say. So you can have this net price displayed to them so that they perceive the price lower. And even though they pay more, they will basically deduct at the end of the month or quarter or whatever, they can deduct this tax. So this is nice because it boosts conversion rates when you show the net prices. However, this trick will only work when you sell locally. It's quite important to note that this show net price makes sense in the local selling, so within the same country, because when you sell to the same country, it doesn't matter whether you sell B2C or B2B, so basically to individuals or to companies, because on the checkout, we will always apply this tax rate that you define. So if someone puts the personal details or selects purchase as a business and provides the proper tax ID, it doesn't really matter because this tax will always be applied in the checkout and it will be here in the final price. So that's why it makes sense to show lower price here for businesses, because they will pay this tax with your purchase, but then they can deduct it from their expenses. So this is the transparent tax to them. So it's better to show lower price here. However, this is slightly different for global sales. So let's switch to global sales. And this is much more important for you because as a creator, digital products are, global by definition. So you want to sell them globally, okay? So when you are selling globally, tax needs to be calculated in the checkout. Like we explained, when you're selling to a customer from Albania, we decide based on the category of the product, what kind of tax to apply, and we do that in the checkout. Then you can also determine whether you want to include or exclude this tax from the price. And this is pretty important because once you decide that you want to earn $39 on each sales, then if you include the tax in your price, then you won't be earning $39 and you don't really know how much you'll be earning because these taxes are different. So you can decide to exclude this tax from the price. And then what will happen is you will always earn $39 plus the tax that will be calculated. So there will be different taxes all around the world, but you don't really care. And you have like maybe stable income that you can predict because you always get net price of $39. It has some drawbacks, however, because in most checkouts, when you have like different steps of the process, and on the first step it's $39, and then in the last step is $39 plus tax, people will drop your checkout because they are not happy about it, they don't feel confident, and this will decrease the conversions of your checkout. That's why within Easytools, we try to make it really better and transparent. We keep it within one page so that people kind of know what the tax is and why they are paying more, but still it can give you a bit less of conversion. So depending on what you want to do, you might include or exclude the tax from the price. And let me show you how it works. So here in the product, I have this tax handling, and now the tax is excluded. I can include the tax in the price. So now let's disable this show net price. If I include the tax in the price, then let me publish this project so that I can preview the checkout, because only in this preview the taxes will be calculated. As you can see, I have a sales tax of 23%, and now the complete purchase will be $39 because this tax is included in this price. However, if I select tax excluded and I save it and I publish, then the preview will be different, because then we'll have $39 for the product and also $9 for the tax, and the total amount is $47.97. This is how much the customer will pay. So once it gives you confidence that you will be always, earning $39, then, customers might be really a bit more disappointed because they see different price here and there, and also the product is a bit more expensive. So this is what you can do with price included and price tax excluded. And also usually when you are selling B2C to individuals, probably you want to include this tax because individuals, they expect that they will pay, tax in the price. And when you are mainly selling B2B to businesses with valid tax IDs, well, then you can say tax excluded. And this really boils down to how the sales tax is calculated in the checkout, where it depends on three things, as you can see. So where the seller is registered, where the buyer is located, and whether the buyer is a business, okay? So this is three things that you have to take into consideration. We have to take into consideration when calculating the tax in the checkout. So your country of registration, where the customer comes from, and whether this is a business or not. Now, let's see how it works in practice with this $39 product. So the tax is excluded, so it will be added on top of this price. And I am sure that I will just earn $39. And then on top of that, there is a sales tax of 23% added to the checkout. So the total is almost $50. Why is this tax added? Well, as I said, first we determine the country of the origin of the seller. So where is the seller registered? And my company is registered in Poland. Now, the second thing I take into consideration is where is my client? Where is my customer? Well, the customer is also in Poland. So if I'm selling Poland to Poland, I will apply this sales tax, okay? And this is always a rule for all of the domestic sales, for all of the sales within the same country. However, if the customer is from a different country, let's say Germany, okay? And I'm going to select Germany in the checkout. Then I will also apply the sales tax, but this time it's different. It's 19%, so it's a bit lower total sum that I have to pay, because the sales tax for this certain type of product in Germany is 19%. So what if I go to Spain? Let's see, we have the sales tax of 21, so it's again a bit less, because that kind of product is taxed 21% VAT in Spain. Now, there are also countries that will give me different results. For example, if I go to US or, for example, Australia, if I select Australia, then the tax disappears altogether. Well, this is really great. It's perfect situation when a customer doesn't have to pay any tax in the checkout. How is it even possible that I don't have to charge tax for people from Australia? This is the best part of this tutorial. I'm going to show you that in a second, but now I'm just going to tell you that there is some threshold, some amount that you have to surpass in order to pay taxes in different countries. And this will save us as creators. So stay with me because it's really important. But this basically makes me not pay taxes in multiple countries, is in most of the world. So why do I pay taxes in Germany? Well, I pay them because I surpass certain threshold of taxes, and also I am registered to taxes in European Union. That's why I have to pay them. But otherwise, in US and Australia, I don't have to pay any tax. So even those B2C purchases for individuals are free of tax to up a certain amount. And this is absolutely brilliant. Now, there's one more very important thing about this. Now we are talking about B2C sales, so individual customers. But what happens if someone wants to purchase as a business? Well, then he clicks on purchase as a business and provides a tax ID. If this is a valid tax ID for Germany, for example, that tax ID is valid, and we validate it with different services, because you are, as a seller, you are responsible for checking those tax IDs. And this makes sense because when the tax ID is valid, then there is no tax and someone can complete purchase for $39. So when someone has a valid tax ID, he can basically pay less for your product. That's why you as a seller are responsible for checking whether this tax ID is valid. And we actually, on Easytools, we take care of it for you in most of the cases. So we use a lot of different databases of companies like VS in EU to check those tax IDs. And in most of the countries and in most cases, for example, if I go to Poland, we will also be able to validate this, not only validate this ID, I will provide one of my IDs, but also get all the information for the company, so it will be automatically filled, so the company address and stuff like that, and people don't have to provide those details in the checkout, which is obviously a conversion killer. The more fields you have to fill in, the more likely people are to leave your checkout. And we measured in our A/B tests that any field above 4 in the checkout reduces conversion rates even by 4%. So we really try to reduce the number of fields that someone has to fill in here, so that the address is now automatically collected. But this is also a slightly different case. As you saw before, with the German company, I didn't have to pay tax. So why with the Polish company, I have to pay tax on top? Well, this is specifically because the seller is located in Poland and the buyer is located in Poland. So as I said before, there is always tax applied. But this tax is in fact transparent for this company, and the company can deduct it within the next month or the next quarter. So it's all good. In reality, this tax don't really affect them that much. They will just get it back. However, if you sell from the same country to the same country, and this is B2B, usually, especially in the EU, there is always tax applied, but it doesn't matter that much. If you sell from Poland to Spain or from Spain to Germany, then there is no tax applied in the checkout, and the procedure is called reverse charge, and there is 0% tax on the invoice, which is very convenient. Okay, I know that was difficult, but at least now you know everything about tax calculation, and you also know that we handle this for you. So the next point on our checklist is filled. So you decided whether tax is included or excluded from the price, or you want to display the net price for B2B priority, and you know everything about how to set this up in your product. Then we have to talk about tax jurisdictions. So tax jurisdiction is an area that has its own tax regulations. It can be a county, it can be a state in US, it can be a country. As a creator, you may have to register and comply to the laws of each tax jurisdictions you sell to. Yes, in theory, this means that you should register, file, and remit taxes to each and every country your customers are in. But in reality, this can be avoided with thresholds that I mentioned, and I'm going to discuss them in detail on the next slide, so please stay with me. So the jurisdiction is not only the country of where you registered your company. This can be any country where you have to register to pay taxes. So you can be registered to different jurisdictions because you have some VAT or GST or sales tax to pay in those jurisdictions. One company, therefore, can be registered in multiple jurisdictions globally. And you can set it all up in Easytools, and this will affect how the taxes are calculated. Because as I say, if you have a registered jurisdiction in Poland and you sell to Polish company, then the VAT will be applied. And if you have your jurisdiction in Switzerland and you sell to Austria or Poland, Polish company, then the tax won't be applied. So how you set up your jurisdictions really affects how your taxes are calculated. So let's see how it can be set up first in Stripe and then in Easytools. If you have Stripe tax enabled, then you will have this little registration tab here. If you go to registration, you see that you have 2 countries of registration added. So this means you are actively collecting taxes for those countries. Well, this is a special category because it's Union OSS. It means that it's the whole European Union, and I will talk about this in a few minutes. However, this is the place where you will add registrations. If you need to collect, remit, and file taxes in any of the countries, then you will just click on Add Registration. You will select the country that you need to register to, or for example, a state in the United States, and you will add this as a registration on Stripe Tax. It's extremely important because it affects how your taxes are calculated. As I say, you don't have to add all of these registrations beforehand because there are thresholds that will protect you from registering to these legislations before you surpass them, and we'll talk about it very soon. Now let's go to Easytools and let's see the very same settings. So in Store and Store Settings, you have Invoicing and Taxes tab. This is the same tab where we've been recently, and here is Registered Jurisdictions. So again, those are countries where your business is registered to remit the taxes. So your home country, probably you know the country of your registration for sure, but also any countries where you surpass the thresholds. And as I said, as creator, you probably won't be registering to any of those countries, or just to some areas that I will explain in detail in a few minutes. But if you want to do it, if you have to do it, then you're just going to add another jurisdiction, select the country, very similar to Stripe. You can optionally select where do you start, when do you start collecting, and when do you end collecting taxes there. And also, if you are registering to filing and remitting taxes to any of the countries, you will also get their tax ID. So you will register on the website, for example, for UK, and you will get through the ID through some administrative process, and you will put it here, and this will let us better handle your tax calculations in the checkout. Like I mentioned, just take it easy right now because you won't be having to worry about most of these things, but it's really important for you to know how this works and what this jurisdiction is. Also, one side note here that the proof of the location has to be collected and provided by you, by the merchant, by the seller. And this means that you have to have the record of countries that people come to your website from and make purchases. There is like a debate on VPNs now. Sometimes people use VPN to basically pay lower taxes because they connect from countries that have like zero tax for the service that you are providing, for example. This is a bit complicated topic, but basically, when someone cheats and someone says that he's not coming from the country that he's coming from, well, this is on him. But basically, you need to take care to have some location proofs So one proof is that he selected this country in the checkout. Another proof is IP, and Stripe collects all the data for you, so they are safe, so that you can show them to authorities if you need to. However, this is something that doesn't have to be, handled by you. Stripe and Easytools are collecting those proofs, and we are also not blocking people who are kind of, using VPNs. It's really hard to set up. So in most of the cases, they will be able to buy with some different details, but this is on them, and basically the responsibility is also on them for providing the right location. And one more thing on that, because as you might understand it now, it's really difficult to keep track of everything. And also, in order to keep track of all the sales tax rates all over the world and the changes in law, it's impossible to do it like the dedicated company has to do it. That is why we partner with Quaderno to deliver accurate tax calculations. We partner with the best in the world. So the best backend in the world for payments is now Stripe. So we partner with Stripe, and the best tax calculations are delivered by Quaderno. Their whole company is focused on having it right, handling it correctly. So basically what we do is we partner with them and implement in our solution different things that will let us check the VAT and GST rates and stuff like this. And from their APIs, we're going to calculate it in the checkout. And the great news is that you have it included in our easy billing plan. You don't have to pay extra. And usually for Quaderno, you will pay 99 euro a month. Those services are not cheap because they are very robust and very reliable as well. They have to work, good. So basically, they are usually expensive. So you'd have to pay like 150 or 99 euro. And this is included in Easytools. So this is a great news for you. And this way we can also have the accurate taxes and accurate rates all the time. Okay, so let's proceed from jurisdictions to the checklist, and then the thing that interests us the most. So next point on our checklist is that you've set up your primary tax jurisdiction, which is basically the country of your origin where your company is registered in, but also in future you will be setting up those different jurisdictions. For now, you don't really have to. Now, the best part, okay? So why you will love tax thresholds. Finally, a tax threshold is the sales amount, so the whole revenue that you must exceed in a given country to trigger the requirement to register for tax purposes. Before you trigger this threshold, you don't have to register for taxes, nor you have to charge people taxes. So basically, all your taxes are zero. Before you reach the threshold, all your taxes in this specific country are zero. And for example, in different jurisdictions, for example, in the United States, where thresholds are quite high, the typical tax registration threshold is 200 transactions because it can be like counted in transactions. So once you surpass that, you have to register, or it is counted in revenue. So this is on average 100,000 in sales in the previous or current calendar year. So usually in the US, for the specific state, for each of every state, you don't have to register to taxes and you don't have to pay taxes unless you meet these thresholds. In some states, these limits are even higher. So for example, in California, the threshold is as high as $500,000. And thresholds are set separately in each state, so exceeding them isn't really easy unless you earn a lot, like millions of dollars probably. So this is really great news because all the headache is gone because of the thresholds. For example, in Delaware, there's no tax from, let's say, SaaS or digital products, so you don't have to pay any tax. In California, $500,000 a year. Then you have different other states that's at least 100,000. So that's quite a lot, quite a substantial amount. And once you are ready to, pay those taxes, it means that you earn so much that you can easily outsource it to the best company to handle it for you. So this is great news. And also great news is that Easytools will keep track of thresholds for you. Also, Stripe can do it with their really expensive Stripe tax service, but if you need or want to use it, of course, you can do it as well. But Easytools has also some advantages, and I'm going to show you what I mean by this. So once you use Stripe tax, this is Stripe and how to handle those thresholds in Stripe. Well, if you use Stripe and you enable Stripe tax, then you have thresholds here. So you can see what is exactly like the sales number to each of the states or each of the countries. And also you can see that, for example, in Peru, I've exceeded the threshold. So I need to register to taxes in Peru. So this is not a great thing. Okay, I need to be careful, and I need to add this registration. I need to probably go to their website and fill some documents. I need to start filling the taxes in Peru or Armenia because I've exceeded the thresholds. So this is how Stripe can keep track of everything. And also on Easytools, we do the same. If you take a look at the very same page, and also we have some detailed reports, but on the very same page in store settings, and invoicing and taxes, at the very bottom, I have all the countries and I have sales to those different countries and regions. So for example, if I see in the United States, I can see both the threshold. So for example, in Alabama, it's 250K, and what's left in the threshold, it's the same because I don't have any sales there. But for example, in Florida, I already have some sales, and there is a threshold of 100,000, and I've already sold something for 745. So there is still 99,000 left for me to sell in Florida until I have to care about taxes at all. And one important note here, well, once I surpass those thresholds, you don't want to do it, but once you do, and once I surpass 100,000 in Florida in 1 year, in one calendar year, then it's important that I don't have to pay taxes from this 100,000. I will pay taxes only for what's above this. Okay, so this is fairly simple. I don't have to track it from the beginning. I just have to start tracking it and start paying taxes from when I reach 100,000. However, this is also important that I don't surpass this threshold, because it's not that it resets every calendar year once I surpass it. Unfortunately, in most countries, in most states, once I surpass the thresholds, every year I will be obliged to pay taxes from $1. Okay, so there is no threshold, no more threshold for me. So I need to be very cautious about just surpassing the thresholds. And this is where Easytool excels, because in Stripe you cannot say that, okay, I don't want to sell to Florida anymore because I'm close to threshold, something like that. In Easytools you can do it. You can one-click disable selling to this country. What's more, we have really cool feature that will disable countries with immediate tax obligation. It means that, for example, Peru, which has ridiculous one transaction threshold. So basically from the first transaction, you would have to go to Peru and register there and fill in the taxes. Well, with one switch, I can just disable those countries, those troublesome countries that gives me a headache, that have low thresholds. And usually I'm not selling a lot to Peru, anyways. Those are not really important countries. So Stripe doesn't have it, but on Easytools, you can one-click disable countries with immediate tax obligation. Also, you can automatically disable countries when approaching to threshold. So again, a life-saving feature, and it's not available in Stripe. So you can turn it on, and then once you are close to thresholds, for example, in Alaska, or maybe in Austria or Belgium or in European Union, we will then automatically disable selling there for the rest of the year, because most of the threshold work for a calendar year. So this is really a life-saving feature. And what happens then is basically this country or this state disappears from the checkout. It doesn't mean that customers will be locked out from purchasing, locked out from the checkout. No, they won't have their state in the list, so they should select another state and proceed with the purchase, or basically they won't be able to select it from the list, and this will save you from having to registering there. And this is a unique feature that only Easytools has. So those two features really great. You can decide, you can enable and disable sales, and this will protect you from most of the trouble with surpassing threshold. Once you stay within the thresholds, you are pretty safe, because you first have more competitive products, because taxes for customers where you haven't surpassed the thresholds will be zero. So imagine you are selling an ebook or a Notion template in US, so for customers from US, and you are from outside of US, and there is zero tax. But the same templates that your competition sells from US, they are taxed, maybe 6, maybe 8, maybe 10%, but they are more expensive. So you have more competitive products. And also taxes for B2B in general will be zero. Like I said, the peace of mind that you have is, my advice is to stay away as long as possible from reaching and surpassing the thresholds. And we have the tools that will help you mitigate this. We have additional tools that you can disable those countries with immediate tax obligation. Like I said, you can automatically disable countries close to reaching thresholds as well. And also, of course, we will send you email notifications about going to, being close to reaching those thresholds in different countries. So the next thing is that you are monitoring your tax thresholds, and also that you've disabled countries with immediate tax obligations and those close to thresholds. That's on our checklist. Okay, but the question is, what is after that? Because maybe I want to sell to Peru. Maybe I want to sell more than half a mil to California. So if you are in this situation, I think that you have the headache of a happy person because this means that you are earning a lot. So if I'm doing that, and I never managed to do it with my info products, with my creator businesses, but if I would just be really happy that I can outsource it to the best company that can handle it automatically for me. And we partner with such companies on Easytools. There is a list of companies that we recommend. You just fill in the simple form in Airtable that I will provide the link to, and we will connect you to the very best tax service that charges like 50 or 70 bucks a month and additional maybe 200 or 300 for a registration one time, and then you don't have to care about this. This is really great. But if you are worried about surpassing threshold or maybe not having an income from those regions where there is a low threshold, something like that, well, then you would have to register and remit and file those taxes. And I'm going to show you 2 examples where you really want to do that. But also I want to point out that, most of the companies, they really didn't care about this for years. For example, I've recently found out that Framer, that was founded in 2013, this is in this tweet. So they had 100 million valuation, and only now, after 10 years, they introduced tax compliance. Before that, they didn't really probably care about this. And I've heard about big companies being sold for hundreds of millions of dollars, and they didn't have tax compliance in place. Of course, this is a valid problem as governments are getting better and better in having the means to check whether we owe them taxes. So I'm not saying that you shouldn't pay taxes, but I'm also not saying that you should stress a lot if you've just discovered that, wow, you have taxes to pay. For example, if you were using Gumroad before 2025, you probably don't know that you own a lot of taxes to a lot of countries, because Gumroad up to 2025, they were not a complete merchant of record. They were not handling taxes for you. For example, they were handling taxes only in 6 out of almost 50 states in the US. So basically, there is high chance, high risk that you are owning some taxes already. Should you sweat about this? I don't think so. I think that you should take it easy. To be honest, you can never be compliant, like fully compliant. It's impossible. It's truly impossible. Even if you use every and each of these methods, you will only be like 98, 99% compatible and compliant to the tax laws. So basically, it's, I guess, important to just do what you feel it's right and just try your best, but don't sweat about it too much. If you already have taxes, probably people won't, won't chase you for that. If you have like a few dollars to pay here and there, it's okay. Maybe just try to mitigate it for the future. But there are many huge companies that were not implementing this up until very, very late, up until earning millions of dollars in revenue. So only then you will have to register. But there are 2 important exceptions to that. So exceptions where you should consider registering now. The first is EU and the second is UK. EU, because they have a global, for like all of the European countries, threshold of 10,000 euro. Once you earn more than 10,000 from different countries in EU, then you won't be eligible to sign up for the really great process that they have, Unified VAT OSS procedure. What is the OSS procedure? It's basically one-stop shop. When you pay just a amount of tax once a quarter. You pay a certain amount of tax to one window, to one account number, and they will distribute this tax to every country in EU where you have tax liabilities. So it's a really great and easy procedure, and everyone can do it. Well, most of the accountants within US can do it themselves, but also companies that are from outside of the US, they obviously have to pay those taxes, because it doesn't matter that they are outside of EU, it matters that their customers are in EU. So once they sell to their customers above 10,000 euro, then it gets problematic. Why? Because then they will have to register to every European country and track the thresholds there, and it's pretty pain in the ass. While before you surpass this 10,000 euro threshold, you can sign up for a VAT OSS procedure, and it doesn't matter whether you're from EU or from outside of EU. It's just the difference that if you're from EU, then you register in your country of origin where your company is registered, and if you are from outside, let's say from US, you will register via any country you wish. And I really recommend you register via Ireland, because it's in English and it's super easy. It's like half an hour to fill in the form, and then you will have to send the reports that will have all of the individual countries and how much you own to each country, but the total amount you will send to one account that you will get from them, and you will also get European tax ID. And as far as those reports are concerned, you will get everything from Easytools. Those reports, how much to pay where, you will get from Easytools, and you will just use this information to fill the documents within a quarterly report. You can do it yourself. If you're in the EU, probably your accountant can do it as well. If you're from outside of EU, there are companies that we can help you with that, and that's pretty easy, and it's a low subscription to do it. But it's worth it, because you want to sell a lot to EU-based customers. And also UK, which after Brexit has no thresholds, so you should pay taxes from the first transaction. It's super stupid. But the upside is that the registration is also really easy. It takes maybe an hour, but basically you can do it via their website. It's in English, and you will get their tax ID, and also then you will remit taxes to them. As I said, you can use one of the professional firms that we partner with to do it for you. But me personally, I've been doing this for years, and it's really not that difficult. So you can also probably do it yourself, or your wife or your partner or your husband can do it for you. So the checklist is that you've registered to EU VAT OSS and UK taxes. I think it's not a huge rush. It's not like you're going to be arrested for not paying from one transaction, but basically, yes, at least figure out how to start this procedure and slowly proceed, so that you can get it, and you can get it right. Then you have issuing invoices, and you have to issue invoices, like correct invoices, in order for your customers to be able to deduct them from their income. So when you issue good invoices, then probably your customers will be more happy to buy your products, because they can put it in their costs and deduct it, and they will get something back. So it's really cheap. It works for their company. This is how economy works. They will constantly ask you to get a proper invoice, though. And unfortunately, most of the services, especially based in US, they issue inappropriate invoices, for example, for EU, where those invoices are more important. So in US, you can basically have like a simple statement or a simplified invoice, or some kind of just like a simple bill that states that you bought a product, and you can deduct it. But in EU, unfortunately, you have to have everything in place. So you have to have valid tax IDs. You need a proper address on the invoice. And usually, companies from US, they don't do it right. Even Stripe invoices are not correct in many countries, including Poland, where I have problems constantly to account them into my taxes. So basically, this is important to have correct invoicing. And for us, for Easytools, Quaderno is again taking care of all of the invoices. It's super clean and it's super good. So we issue correct invoices. We have multiple languages. We handle the currency exchange rates on the invoice, which is mandatory in EU in most countries, and no other company has it, like in US, for example. Also, we are handling returns, correction notes. delivering invoices to customers, and much more. So basically, this is the invoice experience is really important because it builds trust. It generates, if it's wrong, it generates a lot of support inquiries for you and a lot of headache with people constantly wanting, with these Germans still wanting an invoice from you for like $20 service, but it's reasonable for them. Why should they not be able to deduct it, from their costs? It's just running a business. It's good. I think they are totally fair to request those invoices. So you are responsible also for many things that we on Easytools do for you. For example, for validating the tax ID, like I mentioned before, you have to apply correct sales tax, rate in the checkout, as we know, and they are usually responsible. For handling the tax with the reverse charge mechanism. So usually B2B purchases are with tax zero. Theoretically, you need to issue invoices according to your law. But in fact, this won't help if customers want to deduct the costs and the invoice is not properly issued according to their law. Okay, so it doesn't really matter that U.S. law doesn't require you to issue an invoice with all those details. But if a company from Germany or Austria or Poland wants to deduct those costs, they will still need a proper invoice, and they will ask you for it, and you will just have a headache. So this is really important to have it in place. Now, to be very practical, there is something really important you have to take into consideration if you want to use Stripe for invoicing. So it doesn't really matter whether you use Easytools or just Stripe or some other service with Stripe. Well, basically what you need to do is you need to check, you need to fill it out because it's not done by default. You need to go to invoices. So settings, billing, and invoices in Stripe. And here in billing invoices, you have to scroll all the way down and then give your invoice tax information. Like, this is super critical. Otherwise, those invoices issued by Stripe by default are not compliant with most of the, at least, European laws. So basically what you need to do here is provide your tax ID type. So you search for your country, for example, Austria, and then you add your number, you add your tax ID. You can add multiple tax IDs here, and this is necessary in order to issue proper invoices. So once you have it, those information will be on the invoice itself. And one important thing that not many people realize is that once the invoice is issued, it cannot be changed. And in Stripe and in many other services, the invoice cannot be changed. So if you don't have it in place and you issue 100 invoices, you've just issued 100 incorrect invoices, and this is irreversible. What you have to do is to issue some correction notes and some complicated things. So this is really important. And it really doesn't matter if you want to use Stripe alone with, let's say, Stripe Checkout or some service, or you want to use Stripe with EasyCard, because you can also do it. You can use Stripe Tax and EasyCard, and then the invoices that will be issued are those issued by Stripe. So there are some use cases that you might be willing to do it. For example, if you have a long history of selling with Stripe and Stripe Tax and you already have thresholds there, we won't be able to migrate them, and maybe you'd like to stay with Stripe Tax, although it's super expensive comparing to what we have. But if you will, just remember also to fill in those invoice tax information here. Otherwise, all of the invoices that we will issue and deliver to the customers, unfortunately, won't be fully compliant with the global law. And now let's move to Easytools, and the same place, store settings, and invoicing and taxes. And on the very top is basically a base model for how you want to handle and calculate taxes and invoicing. So I can now talk about it because only now, after listening to me for an hour, you understand how all the features work here. And the full summary of these features you will see in checked detail comparison. If you click on this little button on top, you will see that we have different options here. You can use Stripe Tax, Easy Billing, integration, or none. And Easy Billing is all I explained up to this point. So basically you have all of the features, great user experience and great seller experience on our platform. You have country management, tax calculation in checkout, European tax ID validation, and also for some foreign countries we have it. Invoices, so we issue invoices on your behalf. There's a great experience because we send those invoices. They are also in the customer portal. There are refunds and data changes requests that people can do, and you can easily serve them. Customer support, so we help you with billing requests. We handle the support. People reach out to us in order to, let's say, correct the invoice and stuff like this. Then there is threshold monitoring and also disabling countries with tax liability and tax reports that we generate for you, so that you don't really have to care about complying to this, thresholds when you are filing. So everything is in this one service. If you want, you can, because obviously you are using Stripe as well, but if you want, you can also use Stripe Tax to handle this. And this is also a great way. I think it's only a bit weaker in terms of user experience. The thing is that unfortunately, this is much more expensive because Stripe charges you 0.7% per transaction. So this is really high. And you obviously also have a lot of features like that. I've shown you Stripe panel, so you know what you can find them. There you can manage your countries as well via Easytools. So we enable that on our site, even if you are using Stripe Tax. Also calculation in the checkout, we then take it from Stripe, not from our service, but this is also fairly great. And also the tax ID validation, well, we can't just say that it's the same because it's a bit different. Stripe is handling this, and sometimes it's better, sometimes it might be worse. The invoices are issued with Stripe, but we do have them in the customer portal, so we kind of like incorporate in the experience. But again, you have to check whether those invoices are issued correctly for especially European Union purposes. And I know that many accountants, they have doubts about this. For example, there should be an exchange rate on the invoice for the currency, for the local currency and the one that you're selling in. There should be some additional details that sometimes are not included in those invoices. And with our invoices, you can be sure that most of it is handled. And also, those invoices are only in English, and the customer portal for Stripe is only in English. Then you have like an OK invoice experience. Refunds and data changes requests are handled by Stripe. You don't have any other support. Stripe doesn't support your customers. You have threshold monitoring, but it's on Stripe, like I've shown you. It's also very, very good, so that's okay. You cannot disable countries with tax liability. You cannot also disable those countries close to thresholds. So this is a big disadvantage. And Stripe will generate tax reports for you. So this is basically more expensive with less features, but there might be a reason why you want to do it. You can easily do it, use it with Easy as well. The integration is with some accounting software, and you can use the integration together with Stripe Tax even, but not with our service. You don't really need any integrations when you use Easy Billing. But integration is some external application for invoicing, and we still provide you country management and some features, but they are basically responsible for invoicing process. And this results in us sending a request to their API to issue an invoice, but we don't really know what's happening then. And therefore, the customer experience is a bit less of ideal because we cannot send this invoice ourselves. They are usually being sent with a separate email from a separate integration that you have. And also, we cannot have them in customer portal most of the time. You will be responsible for handling data changes on invoices and refund requests, stuff like that. Customer support, we also cannot help you with this because we don't have the invoices. And many different things that you have to take into account here. So this is okay, but still not ideal. Worse, I guess, than Stripe Tax. The Easy Billing is the best solution here. And also, we won't charge you for the integration, but we will charge you if we need to calculate the international taxes. What I mean by that is when you are selling locally with the integration, then it is free of charge. But if you are selling to some different country, then we enable those tax calculation in checkout. So unless, of course, you are just selling locally and you don't want to say globally, that's fine. Then it will be always free. But if you decide to sell internationally, then we will have to calculate those taxes for you so that we send the proper amount of tax to be issued via integration on the invoice. And we have to calculate it ourselves because those integrations, they don't handle that. That's why you will pay a small fee for this transaction only, for this calculation only in the checkout. For the transactions that include this calculations in the checkout, Those are international transactions, and that's it. You can also, but I do not recommend it, select none, because then you don't have any invoices, you don't have tax calculation in the checkout, you have basically nothing. You have to handle it all yourself. And that's why I do recommend easy billing, which is something that we came up with after like months of work and basically selling hundreds of thousands of products that require a proper invoicing and proper tax handling. I think we are ready for everything that you need to do to stay compliant and sleep well. So this is my recommendation. However, there's also one more thing that I want to talk about. I want to talk about the merchant of record model, which seems like super appealing for most of the creators and builders, founders. And on X, on social media, I can see that everyone wants to basically get rid of all of the burden, everything that I was talking about for the past hour. They don't want to deal with that at all, and they just want to have someone to mitigate this risk for them. And this is merchant of record. At least it should be, but in fact, it's not. I'm gonna tell you exactly why it's not. But basically, this is the merchant of record model, and big companies like Paddle, Gumroad, or Lemon Squeezy, they are operating under this model. It means that they act as a seller and they sell your products on their behalf. You just have like a license or something like that they can sell this product to the customers, and then they take their money. They pay you out every month or every 2 weeks or something like that, and they obviously deduct a lot of fees to themselves. And this is one of the biggest disadvantage, I guess, for the merchant of record model. So basically, with merchant of record, now that you understand the thresholds and things like that, I can just, it's obvious for you that you will pay all of the available taxes. So not only the taxes that you need to pay as a creator when you are below thresholds. These merchants of record, they are already past all of the thresholds, and they handle one Stripe account for thousands of sellers, and they have to pay taxes everywhere. So this automatically implies that your products are more expensive to people globally, to people all over the world, because they have to calculate this tax. The thing that I've showed you in the checkout, that, for example, customer from Australia doesn't have to pay any tax on my digital product because I'm below thresholds. This is not a thing with merchant of record. With merchant of record, everyone will pay all the available taxes, so maximum amount of tax. And usually they also don't really care whether you are selling like a product that should be with reduced rate. They prefer to pay bigger rates, like a standard rate, because then they are covered, in case something goes wrong. They pay all of the taxes they could. So this is really important, and no one is talking about it, really. So basically, in their pricing pages, you won't see this anywhere, because it's not their price, it's not the fee that you pay them. It's actually the fact that due to them being merchant of record, selling as one entity for all of the merchants, they are already past the threshold. Therefore, your products are much more expensive. In European Union, it's 20% more expensive. In US, it's maybe about 10% more expensive. But still, if you count this as an additional fee or basically something that your customers have to pay, and they won't convert as good as if your product is cheaper, this is one super important drawback. The second one is you basically also pay a lot more fees. So usually you pay about 5% on base as a base fee, but then you will have another fee for international transactions, another fee for subscriptions, another fee for something. And it's usually closer to 8, maybe to 10%. And Gumroad is charging you 10% flat, but also they charge for the withdrawals and stuff like that, for the payouts. And it's like 13% or something like that. So this is really expensive. If you count on top of that Gumroad is charging you 13% effectively, but also they have to collect, let's say, 10% more of tax, which you otherwise wouldn't have to collect, then it seems that your product, that you are paying like 22% in total, and this is a lot. And also, you don't have to worry about those taxes at all, and they don't solve any of your problems when you are staying under the thresholds, because then you don't have to register anywhere, and you are just paying for all the bureaucracy to them for basically nothing. Of course, this bureaucracy is a lot because they have to register to every country, they have to have partners, they have to have a lot more robust compliance than you have as a creator, even if you do it yourself. So this is something that has to cost a lot, especially that they are US based, and of course the cost of work is very high. So someone has to pay for it, and that's you. Unfortunately, there is more. There's more to merchant of record model than paying a lot more in fees and taxes. The thing is that customers are not yours. You have to take it into consideration. And I had this specific use case when I was trying to sell one of my info products, one of my companies. The company that tried to buy it, well, they basically questioned whether those customers are legally mine and whether I can use their email addresses and stuff like this, because in EU you have RODO, those merchant of records, they don't sign the special agreements that you will be able to use the customer data. And this means that with the EU law, for example, those customers can be used within your company in future. So if you decide to switch to Stripe from merchant of record, well, legally, you shouldn't be even emailing those people. Creators and consultants are not welcome. So basically, there is some limits to what more accept as a risky business. Well, basically, they have to review your business. So you will wait for the approval, which doesn't happen with Stripe. You just get approval in 10 minutes because you are responsible for yourself. But with merchant of record, many types of businesses like creator businesses, courses, consultancy businesses, info products, ebooks, they are not really welcome, and sometimes you will get rejected. I happened to get rejected after 2 years selling the very same product. And for some of the products I applied to sell on one platform, I just got a refusal because they say that they don't accept info products. So they will arbitrarily say that you can or you cannot sell. And this is reasonable because they are responsible for what you are selling. So this is crazy because they are responsible for every product. And also this transferred to you as a responsibility, because you as a merchant you are now responsible kind of for every other merchant on this platform. So if you are selling with Gumroad and one of the sellers of Gumroad is selling illegal stuff, what they will do is they will, and someone sees it, then they will ban Gumroad and ban this one account with your sales as well. So everything can be banned immediately, and this happened in the past. There were companies that basically they had their Stripe account blocked, and they got a fine because of the one merchant's misbehavior. So this is a huge platform risk that you have to think about. Also, governments are not really happy about this model, and this is understandable. So all of the merchant of records, they are based in US, but I know that in EU, there is a law that if they are acting as a kind of marketplace because they hold your money and then they withdraw your money like every 2 weeks or something like this. So basically, those companies in EU, they have to be monitored by many different institutions and government institutions, and this is really serious. And obviously, they don't really have to, the ones that are operating under US law, but you might understand why it's not really welcome in EU. Then payment providers have stricter rules for them. So I discovered that for some platforms, the transaction, like the churn is bigger in the checkout, and also the conversion rates are lower because there are some stricter rules to accept those payments because it's more like a risky business. And many times, even merchants of record themselves, they kind of like apply those stricter rules for payments to pass through because they are responsible for chargebacks, for all of the fraudulent cards and stuff like that. But most of the time, when you kind of like strengthen those rules, it's also that many transactions that are legal and fair, they just don't go through because you want to mitigate the risk of the illegal transactions, obviously. So they shift this towards liability towards sellers. That's why they have lower conversion rates in the checkouts. And also, they can hold your money. This happened to us. I can say that this happened with Paddle. With many customers, it happened for months. They were not withdrawing money for us. And in my case, it was 3 months, but some people reported even longer. And some people reported their company went bankrupt because they were basically not getting paid from their clients, from their customers for months. And this is crazy. This is something that most of the people, they cannot accept it. There is also a big platform risk that I explained. There is higher churn, and this means this higher churn is caused by usually the support model that they have. For example, Gumroad implemented a terrible support with AI now, and most of the people are complaining that they have an AI chatbot that kind of like handles the support requests, like the refunds and stuff like this. The same happens with Paddle, with Lemon Squeezy. I tried to get an invoice from Lemon Squeezy for weeks now, and no one is responding me. So basically, the problem is that you are kind of offloading your support to them, and they have chatbots, they have like automated supports, obviously not connected to your brand. And this is very bad because transactions are where the trust is. So people trust you when they know that they can, pay and get their product. If there is a problem, they cannot get the invoice, they cannot get the product, but they also can't get help. They won't ever trust you again, and they won't ever buy from you anything again. And there is also higher churn because usually those platforms, they are on the statements. So on the bills for the services, it's not your company, it's their company. And people see this on their bank statement, and they don't know what they are buying, and they churn, they resign from it. They block it, or they try to cancel this. Otherwise, they wouldn't be doing that if they know that this is your service and not some other company. So this is not building trust, and you don't build value of your own company. So this is what I mentioned, that customers are not yours, revenues are not really yours. It's kind of like someone understands it, but some VCs or some investors may really discount the deal because of that. And lastly, merchants of records are sometimes evil. For example, there is something that Paddle advertises as sales tax agony index. And they say that if your MRR is like 100,000, then you have this and that tax liability. But they also say that what you're going to do is you're going to just basically be arrested and go to prison. And there is like a high chance that you'll go to prison in India and also in Texas and in Saudi Arabia and US and UK. So, don't go to holiday and don't fly through those countries or states because you can get arrested. I think it's like a very bad way of doing marketing. And making people sign up to your services based on fear that they will go to prison is something that's really unacceptable for me, especially that I don't really know about any case of a creator or someone that sold like digital products or SaaS and was like arrested and went to prison, just because of not paying taxes. And like I mentioned, only like the biggest companies now are, after years, they are starting to comply with this. So this is for me absolutely unacceptable, and I don't really like this way of communication. And unfortunately, I can see that for most of the cases, merchant of records are really successful on different social media because people they are so afraid of taxes that they want to mitigate this no matter what. And they can see that, oh my God, they will go to prison here and there. But they don't really know that, in fact, at the end of the day, this merchant of record, if you are selling, let's say, illegal products or something like that, they will still chase after you, and they will still say to the governments that this is you responsible for most of the things, and if something goes wrong. So what you be sure about is only that they take care about the taxes, but also you cannot be sure about it 100%. It might be that they are not, and they, for example, don't comply for some rules, and then someone chases after them, and then everyone on the platform goes down. So this is really important to take into consideration. There are some specific use cases, and merchant of record model, if done really well for some like super small creators that sell occasionally, might be better in some cases. But again, if you are a super small creator, then you don't have to pay or worry about taxes at all because you are below thresholds, especially with the features that we have on Easytools. So This is something worth considering. And by the way, there is a lot of different creators that came to the same conclusions as I did, like Geoff Roberts from Outseta, who put this blog post, but also there's a lot of different things on X, on merchant of record model, and why it might not be ideal. And of course, here are the same things. He's sharing most of the cons and pros that I was telling you, including customer confusion. So you get bills from an unknown company, then platform risk and everything else, including what I was telling you about, that one of the merchant of records were has been shut down by Stripe, and this is explained here in detail. So I won't be telling a lot more, but I will provide this as a resource. So at the very end, let's go to our checklist and make sure that we have everything here. So you are also issuing correct invoices, especially for EU. That was one of our last points. But also, I've added a recurring section. So things that you'd have to monitor, not only the ones from the checklist, but also monitor for future. And I'm pretty sure that you are aware of it now. So you are monitoring if you have to register anywhere to file and remit taxes. So you are monitoring the thresholds. And if you surpass them and you forget to disable, or you don't want to disable the country, then you are monitoring and registering to those countries, or using a professional company that we can provide you to do it for you. And also you are adding those jurisdictions to Easytools on Stripe or Stripe. So you have to remember that once you register somewhere, you go to Stripe, you click add new jurisdiction, and then they can calculate the taxes correctly. The same happens on Easytools, then we can calculate those taxes correctly for you. And also you are filling and remitting to where you are registered. This is a pain because you have to do it quarterly. For example, you have to send the, let's say, OSS declaration for EU, and we will prepare all of the reports for you. But still, you have to fill in the form on their website. You have to get the sum, and you have to pay for the one bank account so that they can distribute to all of the different countries. And the same you would have to be doing if you are registered in different jurisdictions where you surpass the thresholds. And for that, I would really recommend you to use professional services that you can get from us, not us directly, but the companies that we trust, and they do it for our businesses, because you will pay them like 50 or 70 dollars a month for filing to jurisdiction that you are registered in, and then the problem goes away. And this is when you earn really a lot, when you have a big income. So basically, I think that this is not a cost that is problematic for you. So I think this is overall much better than the merchant of record model, because you are taking responsibility for your own company, for your own taxes, and you are also, you know what you are doing. But with the tools that we offer and with the knowledge that I gave you, you can easily mitigate this risk, and you can also not worry about taxes. For the most of the time, of course, I wish you all the best, and I wish you start caring about the taxes sooner or later. That means that you are earning millions, for example, in US. So this is something that I really trust you will be able to achieve very soon. However, up until this point, I really think that this should be a really well structured foundation for you to understand what you are dealing with. And of course, I cannot recommend you enough Easytools and using our platform and Stripe to basically make this all very convenient and easy to understand, and we'll be always happy to help you and to expand our feature set if it's needed. I don't think anything that I explained today and showed you in Easytools exists in any other tool. So I think we'll be really happy to work with you on that. And in future, we will also try to provide a little bit more services that will make it even more streamlined. I really hope that you enjoyed this material, and I know it's kind of boring. It's a bit boring for me too, as I'm a creator. I want to create, not dealing with taxes. However, throughout the years and selling hundreds of thousands of products online, I realized that yes, this have to be handled like this. I want to take care of my business. I want to build value in my business. Therefore, I don't want to use some merchant of record services. I just want to have control over that and take responsibility. And also, I want to mitigate the risk. And this is why we did all of the features that we implemented in Easytools that you cannot find anywhere else. Lastly, I have some resources for you, and those are mainly guides that we have on Easytools. There's a lot of information on taxes on Easytools, and you can check them out. I don't think that you have to because I've explained a lot, and this is way more than 99% of creators know, probably. But if you really want to just check guides on Easytools, then you also have articles on Quaderno, which are excellent, and also the article on Outseta that I mentioned about Merchant of Record. And also our form to hire a company for compliance that will take care of the registrations and also tax filing and remitting for you. I think once you reach some growth level as a creator, you might consider this. For now, that's it. Thank you very much for tuning in. I know it's been quite a lot, but I hope that it's one big, great foundation for you to understand taxes as a creator and make good decisions on your way. I encourage you to sign up for Easy Tools if you haven't already, and I'll see you there.